Ladies and gentlemen, welcome back to the channel. The stock market has recently hit a series of new all-time highs, breaking out from the prior all-time highs of early December 2024. Here in this video, I will share with you the big events of this upcoming week and all of your breaking news for the day today. Donald Trump says the golden age of America begins right now. And I think that could be true, at least from my perspective. This could also be the new golden age for prosperity in America and for equity investors and maybe meme coins and crypto and everything. Bringing down inflation, reducing government spending, and getting back to a good old organic economy is typically a good thing for stock markets. Look at Argentina's stock market last year, which was the best performing stock market after Milani, reduced inflation, cut back on government regulation, and, got back to a capitalistic economy. The Argentina stock market was by far the best performing stock market of last year by a long shot. You could see here the Argentinian stock market continued to perform well, with the Merval index increasing 172%. The market's strong performance was fueled by investor enthusiasm for the administration of Xavier Milei, I think is how you say that last name. Now, in the news on Friday that sent Nvidia lower, that sent a lot of AI stocks lower, was China's DeepSeek. Now, their R1 model is equivalent to like a ChatGPT 1.0, if you will. They developed this with only $5 million of Nvidia H800s. So not even the newest chips. Spent $5 million developing this ChatGPT-like large language model. And that is seen as a problem, because if China can develop a large language model with so few advanced chips, then why do American companies need all of these billions and billions of dollars of Nvidia products? That is what sent Nvidia lower by about 3.5% on Friday. Now, I have some questions. Do we just arbitrarily believe what China says? Do we know that to be fact? Do we know that they don't have their hands on H100s, or that development only cost $5 million? No, so I don't really give this news a whole lot of credibility. But Wall Street certainly did on Friday. The White House says a huge week for Doge. In the first 80 hours, approximately $400 million of current and impending contracts have been canceled. 2 leases have also been canceled. Initial focus is mainly on DEI contracts and unoccupied buildings. You could see via the debt tracker, the US debt clock, Doge is clocking in at about $19.5 billion worth of government spending savings. This can likely have a positive impact in disinflation, in bringing down inflationary pressures, because inflation is government spending. Golden on X says when greater than 39% of S&P stocks trade above their upper Bollinger Band, the 9 and 12-month forward positivity rate is 96% since 1997. Only one failed occurrence from 2002, with an average return 1 year later of 18%, and again, a positivity rate of 96%. So again, could we see some impressive gains? Maybe. Now, 1 month later, you can actually fall about 1% on average. 2 months later, you can be up about 1% on average. 3 months later, you're up 4% on average. 6 months later, you're up 6% on average. And then things get kind of crazy month 9, and then 1 year later. Prime Minister Trudeau, outgoing Canadian Prime Minister Trudeau, has said that President Trump may have to turn to Russia, China, or Venezuela for resources if he imposes a 25% tariff on Canadian imports. And Elon Musk is exploring blockchain use for government efficiency push. $80 billion. Saudis committing $600 billion in the U.S., SoftBank committing $100 billion in the U.S., new tenant rents went negative for the first time since 2010, which is a leading indicator for shelter inflation coming down. 75% of S&P 500 companies beat earnings so far and raised guidance. We are going to see $1 trillion of buybacks this year. Bitcoin ETFs already have seen $4 billion of inflows in 25 days. Trump is deregulating crypto, energy, AI, and financials. Money market funds still have $7 trillion on the sidelines. Still early into the year, but we can probably expect tons of volatility. But what do you think is the best bear case for 2025 with all of the above? Basically saying you probably don't want to be bearish on markets this year. And I agree with that. Now, this week, we are going to get a ton of economic data and big events. On Monday, Chicago Fed National Activity Index, new home sales month over month, and new home sales for December. Dallas Fed Manufacturing Index as well. All of that between 8:30 and 10:30 in the morning. 8:30 in the morning on Tuesday, we will get durable goods orders month over month, expecting a positive 0.8%, following last month's negative 1.1%. S&P Case-Shiller home price year over year at 9 o'clock in the morning. CB Consumer Confidence at 10 o'clock in the morning. Richmond Fed Manufacturing Index, 10 o'clock in the morning. And at 10:30 in the morning, Dallas Fed Services Index. And a 7-year bond auction at 1 p.m. On Wednesday, we're not going to get much retail inventories excluding autos month over month for December. That comes out at 8:30 in the morning, but we will get at 2 p.m. the Fed interest rate decision. Now, the big question is, Trump has recently called for the Fed to immediately cut rates. Does the Fed kind of take a more dovish stance? Do they set that up? Do they kind of say, hey, tariffs have not been, they haven't been enacted yet. It doesn't look like we're going to get extreme tariffs. We're visual for that. We're remaining attentive to that risk, but we may not have as many inflationary pressures as we thought. Do we get something like that? Or do we get something that's more conservative, that's more defensive, that sounds like the Fed is not really entertaining the thought of cutting rates anytime soon? That's the big question that I have for Wednesday, and I think that'll be important for, investors to be mindful of. Now, on Thursday, we will get the GDP growth rate quarter over quarter advanced data for Q4, expecting 2.7%. Last quarter was 3.1%. So that's going to be important data. Initial jobless claims, expecting those to rise to 225,000 on Thursday. Pending home sales month over month and year over year will also be coming out. On Friday, we will get core PCE price index month over month, personal income month over month, and personal spending month over month. To end it off with Fed Bowman that will speak at 8:30 in the morning. In Chicago, PMIs at 9:45 in the morning. So the big event this week is most certainly going to be the Fed. Now, we do have a lot of earnings as well. The Fed and earnings, really the big story for this week. Starting off Monday, you will get SoFi, AT&T, Bank of Marin, Bank of Hawaii, Bank of Hope, and some other banks. On Monday, just a lot of banks, Nucor, Alexandria, Berkeley's, and others. Tuesday pre-market, Boeing, GM, Lockheed Martin, Royal Caribbean, RTX, JetBlue, and others. Tuesday, Starbucks, SAP, Logitech, Stride, Chubbs, F5, and Stryker. Wednesday, ASML, Progressive, T-Mobile, ADP, Teva, General Dynamics, and NASDAQ. Wednesday, After Hours, Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Wolfspeed, Western Digital. Thursday, UPS, MasterCard, Dow, Nokia, Southwest, Caterpillar, Comcast, and Mobileye. Thursday, Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, and Decker Brands. And then Friday, ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, and Charter that will be reporting, with some notable names that are missing here like Google and Amazon. Keep in mind, only about 49% of stocks are trading above their 50-day moving average, so 51% of stocks are still below their 50-day moving average, and CNN's Fear and Greed Index is still neutral at 49. So we are far from euphoric. We're far from optimistic in markets, even though indexes are at new all-time highs. There is a divergence between some of the breadth dynamics. We can see stock price breadth is still in extreme fear, but you are seeing some good leading indicators like cyclicals outperforming defensives. Okay, defensives are like maybe a Johnson & Johnson, right? Maybe General Mills or something that is defensive, right? Something you have to buy, something you have to, have for your family. Whereas a cyclical might be a Nike or a Starbucks or something that would benefit from a cyclical recovery in the economy with the consumer, getting better. So there is some very positive signs in our markets. And I think this week could really amplify that outperformance. You could really see a broadening out of our markets if things do go well. If they don't go well, then boy, do we have a bigger issue. Now, sentiment has really flipped from being at multi-year bearish levels to now being fairly positive. We went from 25.4% of investors that were bullish to 43.4% of investors that are bullish. Neutral went from 34.0% to 27.1%, so that was a drop of about 7%, which is large. And bearish investors completely collapsed from 40.6%, a one-year bearish high last week, to 29.4%, okay? I should say 2 weeks ago. Last week dropped to 29.4%, which was a drop of over 11%, which is kind of unheard of on a week over week basis. Now, the big story of this week, I do believe, will be treasury yields. If the Fed can manage to bring down treasury yields, that's going to be great. On Friday, bond yields did fall 2 basis points down to 4.61%. But if we could get a fall down to about 4.4% this upcoming week, I think that would likely fuel a much larger risk on rally. Unfortunately, that is it for your news today. Not much else news. Trump did fire a bunch of secretary generals, it looks like. Some people are calling that a breach of power overnight, so we'll see what comes out of that. But it's really not a whole lot to discuss. Elon Musk taking a very right-wing approach to the German election coming up. He spoke to the ADF party that is running for election, and we'll see what comes with all of that. It is also being rumored that the Secretary of Staff of Trump is limiting how much direct contact Elon has with Trump. So we'll see what happens with Doge. But so far, Doge looks to be a positive in bringing it down government spending. Ladies and gentlemen, let me know what you think about this information and this upcoming week for equities, crypto, and much more. Have a great rest of your day, and I will see you in the next one.